Something fascinating is happening in the semiconductor world right now, and Apple is sitting right at the center of it, turning what looks like a crisis into a potential competitive advantage. Apple's stock, trading under the ticker Apple, has been seeing notable gains recently, and the catalyst is both surprising and deeply strategic. The company has reportedly unveiled plans for new iPhone models even as the broader tech industry is grappling with a significant memory chip crunch. Now, on the surface, that might sound counterintuitive. Why would investors reward a company for launching new products during a period when the very components those products depend on are in short supply? The answer, when you dig deeper, reveals a lot about how Apple operates differently from nearly every other player in this space. Let's talk about the memory crunch itself, because this is the backdrop that makes Apple's move so significant. The global supply of DRAM and NAND flash memory, the kinds of chips that power smartphones, laptops, and data centers, has been under intense pressure. Supply chain disruptions, surging demand from AI infrastructure build-outs, and constrained manufacturing capacity have created a bottleneck that is squeezing manufacturers across the board. Companies that rely on spot market purchasing for their memory needs are getting hit hardest, facing elevated costs and unpredictable availability. But here is where Apple's story diverges sharply from the industry narrative. Apple has long been known for its extraordinarily disciplined supply chain management. The company typically locks in long-term agreements with memory suppliers like SK Hynix, Samsung, and Micron, often committing to volume purchases well in advance. This means Apple is largely insulated from the volatility that is currently punishing its competitors. While other smartphone manufacturers scramble to secure memory at premium prices, Apple is operating with a degree of stability that few companies in the consumer electronics space can match. Now layer on top of that the announcement of new iPhone models, and investors begin to see a very clear picture. Apple is not just surviving the memory crunch, it appears to be positioned to capitalize on it. By moving forward with new device launches while rivals potentially delay or scale back their own product roadmaps due to component constraints, Apple could find itself with significantly reduced competition in the premium smartphone segment at exactly the moment when consumer upgrade cycles are heating up. There is also an artificial intelligence dimension here that deserves serious attention. Apple's newer iPhone models are expected to feature enhanced on-device AI capabilities, requiring more sophisticated and higher capacity memory configurations than previous generations. The fact that Apple is pushing ahead with these plans despite industry-wide memory scarcity suggests the company has secured the necessary supply, which in itself signals the kind of supplier relationships and financial muscle that smaller competitors simply cannot replicate. From an investor perspective, the market's positive reaction to this news reflects something beyond just optimism about new product launches. It reflects confidence in Apple's structural advantages, its supply chain resilience, its ability to command preferential treatment from suppliers, and its track record of maintaining premium pricing power even in challenging macro environments. When the entire industry is under pressure and one company appears to be moving forward with business as usual, that company tends to get rewarded. The broader question worth sitting with, however, is whether Apple's position in this memory crunch is a short-term advantage or signals something more enduring about competitive dynamics in the smartphone industry. As AI-driven hardware demands continue escalating, the companies with the deepest supplier relationships and the most sophisticated procurement strategies will increasingly pull away from the field. And that raises a genuinely provocative thought: in a world where the most critical components are becoming the scarcest, is supply chain mastery quietly becoming more valuable than product innovation itself?